Let me welcome Rahul Guha on the show to understand more and what's the way forward for the company. Rahul, hi. Firstly, congratulations on a good set of earnings. Even the investors are cheering the kind of earnings that you have reported. But Rahul, help us with the outlook first for FY26, because the question that remains is that how much of this growth is sustainable going ahead, and if we are in to see above 30% of the margins going ahead as well, what will be the key drivers?
Thank you. And firstly, very happy Diwali in advance. And we planned our
Thank
Diwali
you.
present for our shareholders with on the 25th anniversary of Thyrocare with a bonus share, dividend, and good results.
Yeah.
So wishing happy Diwali to all our shareholders. Uh, on regards to growth, look, growth solves everything, right? And on the back of 22% growth with our pathology business at growing at about 24%, all of it volume driven, almost all of it volume driven. It's a huge endorsement of our value proposition to the customer to be the most affordable diagnostics testing provider with exceptional quality. And that proposition is working in the market. Our franchise base is at an all-time high. We went from a low of about 2,700 in FY22 to 10,000 plus today, as well as a very strong list of health tech partners, insurance partners, large corporates working with us on the testing side. And it just shows us that the value proposition of affordable, good quality testing is really working. With regards to outlook of FY26, in the beginning of the year, I had guided to about a mid-teens kind of growth, almost all of it volume led. And we're tracking, of course, well ahead of that. But, the second quarter it tends to be a very good quarter as we move into third quarter, which is the festive season. People don't like to do testing, so we see a little bit of a dip at that point in time. But I'm very confident we'll definitely be able to meet our guidance and possibly even do better than that.
Mid-teens guidance, and you had registered total sales of about 687 crores last year in FY25. So you are expecting about 800 crores of sales this year. Am I getting you right?
That would be the target, and let's see how it goes towards the second half of the year, but definitely aspiring to those numbers.
Okay, and what about margins then? You've maintained margins in the range of 16 to 18% to 19% in the previous quarter. You're saying that you will be able to maintain those guidance margins in the second half of the year, right?
I would anticipate so for the second half of the year. Q3 tends to be a bit tight because, as you know, the costs are fixed, but the revenue is not to that extent. But then we normally cover it up in Q4. So I would calibrate that expectation, but definitely H2, we should be able to maintain the margins where we are, unless some very big investment opportunity comes our way, which we will then definitely invest to fuel the growth.
Rahul, if I see your contribution coming in from FarmEasy, that's the online platform, that has seen an impressive growth of almost 34%, and this segment is seen to be growing faster than your overall business. Help us understand, how is Thyrocare planning to expand over here, and what are the other plans with respect to the B2C partnerships as well as your other models picking up?
So I would say API of FarmEasy is no exception in the partnerships. Our partnerships have grown 35%, and API is in line with that. So what we are definitely seeing is a lot of diagnostics testing moving to the health tech players because of the service offering, the app-based way that they're able to deliver an exceptional service experience. A lot of them, of course, powered by Thyrocare on the backbone, both in terms of sample collection as well as processing. But I would say API is no exception from any of the other health tech players. It's kind of growing in line with all our normal partnerships business.
Okay, and one last two-part question. One is with respect to competition and its impact on pricing that we are seeing in the industry. And second, what will your expansion plans be in the domestic and global market?
Yeah. So with respect to competition, I think competition has become quite rational, right? If you go back 2, 3 years ago when everyone had got into the space, I think people have now realized it's not as easy as it may seem on the outside, right? This is a very complicated business. We have logistics, we have delivery boys, we have sample collection staff, we have a laboratory. So it's kind of a service business along with a manufacturing business all rolled into one. And it's not so easy to deliver an exceptional experience to the customer while keeping your costs low so that you can make it affordable as well. And so I would say most of the competition now has come to rational pricing where it makes sense. I have not seen too many players now enter with predatory pricing. And that leads to healthy competition, which expands the market at the end of the day. In India, there are millions of people who have never done a diagnostic test, right? And having more players enter the segment with rational pricing, good quality, and awareness of what it means to test early only expands the market, which is much, much needed in the healthcare sector in India. On your second question on expansion, we continue to expand. Thyrocare is actually only present in about 5, 6,000 pin codes. So there's a huge scope for us to expand our value proposition across India. We are the deepest in the country with presence in now almost 450 cities. So a large presence in tier 2 and beyond. But we expect to double down on that, expand more and more into the smaller towns, and ensure that everyone in India has access to good quality, affordable testing so that they can take care of their health. With regards to international, Africa was our first step in Tanzania. That's going very well, but we want to stabilize that and really get our international playbook in place before we push
Sure.
the pedal on that expansion.
All right, we look forward to it, Rahul. But with this, we let you go. So good having you on the channel today. Thank you so much for your time, and festive greetings to you and your entire team.